if you could change one thing about the industry, what would it be?
I wish more people in the industry were structurally allowed to take more risk. You can replace people, products, services, businesses that exist with something that's 10 times better with new technology, or you can build net new stuff that doesn't exist, transform the industry, bring new supply in when that comes to demand. Spent a year with Suffolk Construction working on what I still think is the industry's first and potentially only data lake. The industry is saturated with software. Sort of Procore had just gone public. PlanGrid was $1 billion exit. FieldWire was a several $100 million exit. It's great. You go and you talk to guys in the field, and they were just reporting what they call tech anxiety, tech fatigue.
So we're back with another episode of The Down Low with Joe, here with my co-host, Louis Martin. We have a great guest from Era Ventures, Raja Ghawi. Raja, thanks for joining us first. And I think you're an interesting guest simply because you have a long bit of experience in real estate. You also look across prop tech. I know we're going to talk about that term beyond just building operations as one part of prop tech. Maybe just start with a quick intro of yourself, and then we'd love to hear more about Era.
Yeah, thank you guys for hosting me today. So my name is Raja. I was born and raised in Syria. Both my parents are architects. My grandfather used to own a big contracting business back in the day. And I grew up surrounded by sort of construction schematics and my folks driving me and my sister around in a car, pointing at buildings and saying, we designed that, it's a good building, you know, the civil engineer in that one, stay away. It's something that really ran in the family. All my uncles and aunts are sort of engineers for the most part. My parents sort of drilled into me and my sister that they worked twice as hard as doctors and made half the money as architects, and that we should stay away from the industry as much as possible. But the bug was always there. I ended up leaving Syria in 2011 to study bioengineering at Harvard, and decided that even that kind of engineering wasn't necessarily for me, and I ended up doing a sort of a 3-year stint in consulting. Did what sort of McKinsey calls the random walk, trying as many industries as I could. And one of the big insights I had was for a good chunk of my last year there, I spent doing sort of AI work and machine learning work for old industries, a bank, a mining company, a sports team. And I saw how there was a lot of sort of new data available. This is now sort of 2016, 2017, in these older industries, how there's a lot of signal coming out of that data, and that there's an interesting moment for technology to really move the needle. From there, I had the opportunity to go and join Suffolk Construction in Boston to help build a data and analytics practice in 2018. So I sort of took my parents' advice to avoid the industry at all costs and threw caution to the wind. And I was like, let's go and do it. It was something I was genuinely passionate about as well. Sort of reports out of Syria at that point were saying there's about $400 billion in reconstruction that was required after sort of the civil war. It's the figure about $1 trillion right now that the war is over. And I thought if there's anything I could do sort of to go back, would have to start with construction. So let me just learn about this industry and see sort of what technology can do to make it a lot better, right? So spent a year with Suffolk Construction working on what I still think is the industry's first and potentially only data lake. So we pulled all the data coming out of Suffolk's 100 job sites and sort of historically going back over 10 years and put it in one system and said, well, what can we do with this? We were able to build a predictive algorithm on safety data that predicted worker safety injuries and incidents a week before they happened with pretty good accuracy. And then we paused and said, okay, there's only so much any one construction sort of business can do in terms of data and analytics and AI, just because the industry is so massive and fragmented. The scale of data you need to do sort of anything that moves the needle for the entire industry is quite massive. This kind of innovation should probably come from outside of the incumbents. We looked around, and all these startups at the time were hiring insanely amazing talent, raising venture capital, some good exits were starting to materialize, and we said, well, let's go invest in good companies. So we set up a corporate venture practice, and I was there for its first 3 years. Helped invest in a couple dozen founders, launched an accelerator program called Boost. And over those 3 years, got to work with some great founders in the industry. But one of my big insights was the industry is saturated with software. sort of Procore had just gone public. PlanGrid was $1 billion exit. FieldWire was a several $100 million exit. It's great. You go and you talk to guys in the field, and they were just reporting what they called tech anxiety or tech fatigue. It's like, don't give me another Google form in an app. Get out of my way. I need to build, right? And I took a step back and I thought, well, okay, so how does this industry make money? Where does spend go? And the way I view it was, and this applies to sort of construction, but the physical world at large, there's sort of three legs to the stool. There's labor, right? And that's 40 to 60% depending on the asset class in terms of spend. And then there's materials, right? All the inputs into a building. And then you have the financing part, debt, equity, insurance. Those are the three things that really get that building built. And that's where all the margin is. And really sort of the small coordination layer that brings all of those together, where software plays, where AI is playing right now, it's quite minimal. The industry spends 1 to 2% max of revenue on IT. Sort of it's sub 10% across other segments, but within the physical world, it's minimal because you need to pay the people to put up the materials and finance them. That's where the bulk of the spend goes. So I was like, okay, I'm very excited to go invest in business models outside of software. I think we have a lot of software. There's always space for more. But I think the bulk of innovation, the bulk of opportunity is going to come from elsewhere. And sort of in the process of helping set up a venture fund, met my current partner, Claudia Peters. She was at Main Capital Ventures. She had sort of a similar insight and similar risk appetite for sort of a wider variety of investable business models for our physical world sort of area of interest. And we partnered up and started Era. So what I like to say at Era, about 3 years in almost now, is that we like to invest in hard businesses in the real world. What does that mean? We think of innovation as something that sits on a spectrum. Call it from least disruptive to most disruptive. You can enable incumbents to do a little better. You can replace people, products, services, businesses that exist with something that's 10 times better with new technology. Or you can build net new stuff that doesn't exist, transform the industry, bring new supply in when that comes to demand. And while we invest across that spectrum, we think a lot of enablement is B2B SaaS. And we think there are some opportunities there for our world, but fewer than most people think. We think that replacement is a lot of fintech, robotics, some AI, tech-enabled services, and we think there's a lot of margin to be had there. And then we think transformation is where new marketplaces and totally new technologies can come in and really sort of change the way we get buildings built, managed, transacted on. And we bias to more in our investment mandate and thesis towards replacement and disruption. So for Fund 1, we've raised $88 million. We've backed 12 founders today, pre-revenue through Series B, and sort of excited to sort of share more with you guys. I know that was a lot, so let me catch a breath.
Yeah, no, I mean, it's so interesting. You said so many interesting things that are worth following up on. I don't know that we'll follow up on all of them, but just like your way of bucketing the opportunities in the industry, and I guess we could think of just the built world as maybe a better way to describe it than real estate or buildings. It's just the physical world, the buildings in the physical world. Just those three buckets. I mean, it sounds like you are making bets across all three, but maybe you're more bullish. I mean, it's almost like higher risk, higher reward, lower risk, lower reward. And maybe from your point of view, I mean, correct me if I'm wrong, but it's worth investing in or making putting some capital work across all three, with the recognition that some of them might really pan out or not, and others probably going to pan out, but they might not be fund making in and of themselves.
Yes, I think sort of there are investable opportunities from a sort of venture lens across all kinds of very different business models. But it's also real that if you look at public markets, there is a SaaS index of many dozen software companies where, for the most part, doing quite well. It's a great revenue profile, cash up front, a sort of 70, 80% gross margin, multi-year contracts. It's great. But also there are probably sort of some very amazing marketplace businesses. Airbnb, for example, might be one of the few $100 billion venture-backed companies of this generation. We'll see. hardware is always hard, but those are massive markets and opportunities when you get something that works. And our current hypothesis is that there are probably fewer investable opportunities with a venture perspective in these gnarlier business models, but the ones that work have much higher potential within the physical world than B2B SaaS. And the reason we believe that is we just look at how the industry spends its money. And so little goes on sort of the coordination layer, and so much more goes into labor, material, and financing. And if you can automate some labor, if you can get into the material procurement transaction, if you can provide better sort of financing options, the margin pool available to you, even though it's not going to be like 8% gross margin, is probably much larger than what sort of B2B SaaS could offer you.
Yeah. And is it true that for the firms that are able to do that, even if their margin profile isn't B2B SaaS, to your point, it's significantly better than their peers, and that gives them some opportunity to take share from peers or just outperform their peers. So in the cohort where you're dealing with maybe poor gross margins, having incrementally better or maybe significantly better gross margins, that's enough to really make the business accelerate and grow. Is that kind of a different way to think about it? Yeah.
Yes, and sort of here are two examples. You could go to a contractor and say, here is a piece of software to help you procure materials for your business, right? You typically buy your materials. We're going to give you sort of the tools to get you off of fax or paper or just calling your buddy, so that you can now run a proper RFP, RFQ. You have a bit of a CRM for your suppliers. You can more easily sort of like track historicals, even reconcile sort of bids with actuals, what was delivered. And there's a lot of value there, right? What will most likely happen is that folks will just digitize their not so optimized processes and still buy the same things from the same suppliers. And it'll minimize human errors. You might be able to sort of compare prices a little bit more accurately than you otherwise did, but you're not bringing new supply in this example, right? You're digitizing existing workflows. Or somebody can come and say, hey, you buy all of your doors and windows from the dealer down the street. He gets it all from China. I know folks in Turkey and Morocco who can do it for half the price, same quality. Buy from me, right? That is a lot more transformational. Now, you're in the business of not selling software at 80% gross margin. You're in the business of selling doors and windows at like 30% gross margin. But you can sell billions in doors and windows, and that's very low market penetration. And there's only so many tens of millions in software ARR that you can sell.
Yeah, yeah. Do you, this is kind of a follow-up question. Do you think that when you're looking at things, I mean, doors and windows are a great example because every building has doors and windows, and I don't really see that changing. Right? I mean, but I guess my point, do you feel like the innovation or the opportunity is better procurement, more efficient procurement, or is it, I mean, I'm thinking of, there have been window companies that have electrochromatic glass. The idea there, one of the value props is you don't need shades anymore, but we actually can save energy because you might not pull down your shades, even if it's an automated shading system. And that's just one, right? Like that's a little bit more near to my world. But do you think it's like the technology, maybe it isn't either or, but there's the, I'm going to procure, and the supply chain of getting doors and windows, there's a lot of opportunity to make money by doing that better. There's also we just need a better door or a better window. And you're kind of indexing more on the procurement side, but you're not saying because like we don't need a better window. But I'm just interested in do you think through that one or the other, or is it really both?
I think it is both, but I don't know that we need better doors or better windows. The same way we need a better thermostat, right? I don't know that we need better concrete. In a funny way, we should go back to Roman concrete.
Yeah.
Still sanding works really well. So if it's like, it's not just if it's ain't broke, don't fix it. If you're trying to improve on it, the improvement needs to be so much better than the status quo for people to take risk on it, especially when it comes to building materials. A lot of folks are trying to innovate on concrete. There's a lot of carbon emissions in concrete. At the same time, most folks will probably want to see new concrete withstanding 30, 40, 50 years life before they take risk on it, right? I'm pressed to see a high-rise being built with novel materials anytime soon.
Yeah. Yeah. I mean, the joke I've heard about concrete, and you probably have heard this too, but it's like there's concrete, there's like new concrete, or there's like cracked concrete and it hasn't cracked yet concrete. And like, but that's typically like a decades long point of view. And I'm just thinking like our own house, when you see a little crack forming, it's like, well, it's concrete, it's going to crack. It's not like, will it? It will. But you could say that the risk of, oh, this is not as good. You're not necessarily going to know that for 10, 20 years. So
no, my fundamental framework about this industry is the most fires are shields. It is an industry where overperformance is rarely rewarded, let alone appropriately, but underperformance is severely punished, right? Concrete example. If you shave off a little bit of money off of the total package, amazing. If the building falls because it was not structurally sound, somebody loses their license and goes to prison. A lot of people go bankrupt, right? It's an extreme example, but it's quite representative of how this industry operates. So to get folks to take material risk, like sort of meaningful risk, but risk on the construction materials, it needs to be amazing and very de-risked. Otherwise, the structure of the industry just does not permit it.
Yeah.
But there are also pockets where it works. Like Nest was a multi-billion-dollar exit, right? It worked because potentially it was simple, easy, and a consumer play. So it's not either or. It's more so like the industry is fast. Find the pockets where your innovation works best.
Yeah. We've talked a little bit about construction and technology within construction, right? I think if and when people looked at your portfolio, one of the names that they would be most familiar of, at least our listeners and just Joe and myself's network, would be Passive Logic. And I think just looking at your diverse portfolio, I was keen to see kind of what your reasoning was to invest in that business.
First and foremost, amazing team. Team is phenomenal. Troy has been able to recruit some exceptionally smart and hardworking folks. And his and the team's vision is really to automate buildings. If you're able to have the building commission and run itself, the energy savings should be immense, right? And that is direct impact to the bottom lines of all the occupants and tenants. So it was a combination of, this is a great team taking on a massive problem against a set of incumbents, which is the big four automation players that've been around for about 100 years and have not really meaningfully done any R&D in the last several decades, right? So something's going to get.
You hope.
Yeah, they're all, a lot of them. I mean, I used to work at Johnson Controls. I mean, Warren Johnson invented the thermostat, right? So there's a lot of that where the name of the company, Willis Carrier invented HVAC. Carrier's a very big controls company, not as big as the big four, to your point, but yeah, I mean, they all say, it's interesting because in my newsletter I cover what are they saying to Wall Street, because I mean they're public companies, right? Like private companies they are absolutely spending a lot of money. I mean, I worked there, so I even saw it 10, 15 years ago. But you have an interesting point where, are they really, I mean, there's always this question, can big companies really innovate? And that probably is a timeless debate across all industries, right? But you could bring it down to buildings, and you have the perspective also from construction as well.
I think AI is in a place where you can do a lot of very interesting things. And I think Passive Logic from the get-go has tuned into the fact that you need both hardware and software to get most buildings to operate in a much smarter and energy efficient way. And they're building that full suite of products. It's a hard play, but it is absolutely necessary. And I also think that a lot of the big automation players have very high competency in hardware. but the combination of hardware and cutting edge artificial intelligence and machine learning is a rare set of sort of a rare combination of competencies that justifies the creation of a new company where that's part of the original DNA.
Interesting. Yeah. I mean, one of the points that we started touching on, and I know was, just SaaS, or I mean, there's a lot of it. It's funny because you were noting about when you were first at Suffolk, or when you were at Suffolk, a lot of people building buildings said, I don't need another app. I don't need another. And I actually think we hear that a lot on the building ops side too. And sometimes it's a little nuanced, right? It's I don't need more data because I don't have time to do anything with the data. I was at a conference last week, and this came up a little bit where certain groups, like giving them more data, even if the data has huge value, they don't necessarily have time to act on those data streams. That was not exactly what you said, but it was a similar, I think, point. And that then leads to, well, maybe we shouldn't just be deploying apps. Maybe it is more of a kind of a vertical. We're talking about the physical world. You need to do more than just the software app. Also just a really interesting point
Totally. And again, sort of the industry can only absorb so much software because only so much of the work that the industry does and the time folks in the industry spend is on that coordination portion. And I think that facility manager will probably be a lot more excited if you were to go to him or her and say, hey, you need 2 guys in a truck to come every night at midnight to sweep your big corporate campus parking lot. How about we give you a robot that does it automatically every night and you don't have to worry about managing that anymore? Yeah. That will probably get them very excited, right?
Yeah.
But software to go and manage the guys who come and pick up the trash, probably a lot less exciting.
Yeah. It's kind of the old, and I don't know if we're saying like version 1 or age 1 or trend 1, trend 2, trend, but there was definitely this motion, I think, of this is a paper-based process, let's put it into software. But that only gets you maybe so far, right? That is incrementally beneficial, but it's not maybe a game-changing or a fundamental rethinking of how you do what you do. So, yeah.
That's why we exist as a fund.
Yeah.
I think tying in robotics then, because when we were doing our planning over the last couple of weeks, you'd fairly recently launched a thought leadership piece, and I believe you've also got a company within the portfolio, Viabot, I believe it is. This probably is going to be more of a trend with the continued advancement of AI and ML. But what are your thoughts just overall, like robotics within the built world? Just because from my perspective, we have yet to see the true capabilities or even any adoption at this point. But I appreciate you're probably closer to the ground on either what's happening or what's coming.
It is definitely very early days. And it is real that we have labor shortage, but we've had labor shortage for sort of 10, 20 years. We can talk about why it's getting a lot worse with sort of the politics of the day, but the reality remains that there is a sort of a category of jobs that few, if any, people really want to do that have not been automated yet, right? There are examples where even without major labor shortage, many jobs were automated away, like dishwashing. We had millions of dishwashers in America, and then we created a machine to dishwash, right? And we don't need nearly as many dishwashers anymore, right? So the building sort of the physical world has had a massive sort of set of jobs that are increasingly hard to recruit for, but machines have not yet gotten good enough to replace those jobs. I think that's starting to change for a couple of reasons. I think hardware keeps getting cheaper and cheaper to a point where it is a lot cheaper than human labor, which makes it sort of more and more economically feasible. It's getting smarter and smarter. And it's not just the current jump in LLM technology. It is a lot of machine vision, getting the robots sort of see and interact with the world, not just speak to us. That's making these robots sort of better and more accurate every day. But also, I think more and more talent is spending time in the industry and figuring out the machines that actually sell well. And I think the harder disconnect in this industry is folks who are often building the wrong thing. So the way I like to think about it is there are 3 categories of risk in this industry when it comes to machinery and equipment. There is technical risk, there is utilization risk, and then there's like final output and production risk. If you are Caterpillar, Hilti, Husqvarna, you're taking the technical risk. And these companies are really good at building machines. These machines last 10, 20 years with proper maintenance. They just work, right? Utilization risk is where I think a lot of robotic businesses start to fumble a little bit, because today you either own your own equipment as a contractor or sort of a business, and that is few and far in between, or you're renting it out from the United Rentals and Equipment Shares of the world. And then basically, if it's a machine that you're using sparingly, you don't want it on your books, you don't want it in your warehouse collecting dust, you just want it when you need it. And if it's a machine that you're using all the time, then you probably can keep it and you're fine with that utilization risk. And that's your drill, that's your concrete grinder, that's your crane in some examples, because you just slap it on the side of the building and you're done. And then there's the production risk. Like, your person and your machine need to do the job right. And I think sort of the subcontractor typically takes that risk. And I think what a lot of robotics companies have tried to do is say, let us find a use case where we can build a novel machine oftentimes. And then we need to take on the technical risk, the utilization risk, and the production risk. We're basically a robotics machine that shows up at a job site with their own equipment and does the work. So we can perfect the building of this machine. And then they're unable to shed the production risk and the utilization risk and stick to the technical risk, either because the machine is just very freaking hard to build and perfect, or because the cadence at which people need that machine is low. So they're like, I'm just going to rent this from you, and you're going to take double the risk. And that's just very hard to scale, economically hard to scale, even when the machine works. Are there sort of use cases where you can get to eliminate the technical risk and the utilization risk? I believe so, but they're very hard to find. But their founders are finding them. So it's a very long-winded way of saying the industry needs robots. They really need to work well, but you need to be very smart about the kind of robot to build so that it can sell itself. Otherwise, you're stuck hand-holding the robot for the customer or renting it out and having very suboptimal economics, and neither of those scale.
Yeah, it's interesting. This is maybe a quick thought on that. You see companies pointing to robots for building cars, right? And some of the robots are just, it's a kind of mechanical arm that is putting a very heavy piece of the car onto, like the body, onto the chassis. But then you also see, well, we are going to have humanoid robots. And I've kind of heard this open debate of, well, a lot of our world is designed around humans because we're human, and that makes sense. But if you look at like what's the logical shape of a robot, and I don't have a strong opinion, so I'm interested in your opinion, but it's like, why is it shaped like a human? But your point, it's like, well, if the world is built for humans, it seems like there's more utilization by being a humanoid robot versus, you could say, for a construction site, maybe a humanoid robot could do 5 things, not 1 thing. And it's a construction site versus like an assembly line where you can have a robot doing 1 thing extremely well. And we're building enough cars, it's like, so I don't know, do you have kind of a point of view there, or how that relates to your point specifically on utilization and maybe broader topics too?
Sort of the way I think about it is the future is probably going to have 2 kinds of robots. You're going to have R2D2s and C3POs, right?
Got it.
You're going to have humanoids,
Yeah.
And you're going to have single-purpose robots.
Yeah.
And I think there's a lot of money going to C3POs right now. I think, sure, if you can have a humanoid robot that is multi-purpose, it can do a lot of things in a day, and that keeps its utilization up, and you can like maximize dollars out of it. But to get a machine to be that multi-purpose is quite hard. And at the same time, we do a lot of things that a human body is not an optimal form factor for. Like, if you look at the sort of physical injury rates for construction jobs, like we are not really meant to bend over and pick up things again and again and again. Our backs just give out after sort of however many years. We're not really meant to like paint walls. Shoulders start to give out, right? So you can go and say, oh, a human can do this job, so I'm going to build a machine that mimics the human. It's like, great, but that's not by default an optimal form factor. You might just be building a machine that keeps breaking. And sort of that is one critique I have. I think the kind of durability and maintenance you need on these machines to do jobs that human body is not optimal for, given that they don't self-regenerate the way human bodies do, is going to be a long road. I also think that if you can find a use case where, sort of to your point on production lines, you can have the one machine do the one thing forever and be very good at it, that is a lot more profitable, theoretically, sort of get up and running, than something with a lot longer sort of lead time that will probably take a lot longer to sort of learn or get to that level of precision than the sort of single purpose machine that is parked there doing the same thing again and again and again. So we'll probably have both in the future. I think we'll have more R2D2s than people think, because there is a sort of a massive list, a long set of categories of things like repetitive jobs that humans do today that a machine can and will do soon.
Yeah, it's a good point. I mean, I know friends that work in industrial industries, and there just seems to be a greater adoption of the need for robotics, but also some industries that have yet to pick it up. I've got family who run mid to large factories where they they put fruit and veg in packets and sell them to supermarkets, and that's still being that there's still a need for humans there, where you think from like a low-hanging fruit standpoint, those industries should be one of the earliest to adopt robotics, especially if you're talking about the cost for acquisition and just the cost versus humans is becoming better.
Yeah, I think technology still has ways to go, especially for things like fabrics, fruits and vegetables. Even like there's a long category of materials that robotic arms today just don't handle that well. Unlike sort of carving metal on a production line,
Right.
which robots handle.
They squish the berries, you know.
Yeah.
Yeah.
So sort of somebody's going to figure out how to get a robot to handle all kinds of different materials, and those markets are massive, and the need is dire. But until then, I think us humans are going to be stuck doing these jobs for a while.
But in terms of low-hanging fruit for the built world specifically, like building operations, you think about some of the tasks or services used by FM companies. You imagine they would be the first to be utilizing robotics, like cleaning services. I think I've seen buildings in Asia or APAC probably be early adopters of that, but not so much in the Western world.
So as you sort of referenced earlier, we're investors in a company called Viabot. I sort of like to think of them as an industrial grade Roomba. The Roomba is the best-selling robot to date ever. And what Viabot has done is they built sort of a machine that wakes up at night, picks up trash from your parking lot or garage, and then dumps it and charges itself during the day. So status quo is you typically hire two guys in a truck. They show up at midnight if they show up sober, and they do a meh job, and nobody wants to do these jobs, and the folks who have to do these jobs are likely getting deported. So a lot of folks managing these facilities think corporate campuses, hospital systems, big box retail, industrial sites, big open spaces that need to be maintained. Why not have a robot do the job if it is good enough and priced well enough and operates well enough, right? So Viabot is sort of that company, and they're seeing a lot of traction, right? Immediate ROI, and you don't have to worry about managing people anymore, and it replaces the job of one or two humans immediately. Robot has great uptime in the field, great customer support, and like the thing just works, and you don't have to worry about it, right?
Yeah. And it's also tangible, right? If you're in real estate, I mean, one of the things about operating in real estate is it's there's a product that you are delivering, an experience that you're delivering. That term you could argue is a little overused, but at the end of the day, if I'm renting space in an office, there are certain things I would expect, and you could say like one of the base expectations is it should be clean.
Yeah,
so it
exactly.
touches a lot of. It touches. It's easy, I guess. What I'm saying for somebody who owns a building or buildings, they can probably wrap their head around this. It's like, oh yeah, it's a real thing I have to do. It's a real problem. This looks like a better way of doing it.
Yeah, and there is a long list of night jobs where somebody like shows up at night and does the one thing again and again and again. I think robots will probably take over a lot of those jobs, and they're easier to automate away. Right? You have sort of fewer variables than daytime for virtually any space. Like the parking lot, the office space, they're all empty at night for the most part. And if they're not empty, they're supposed to be empty, the robot will just send a security alert. And that's an extra feature, right? So I think a lot of security use cases, a lot of facility management use cases, cleaning bathrooms, there are a lot of founders building robots for that. And it works for offices. It really works for airports, right? Again, if it's something that you need someone to do every day and it's very hard to get a human to do it, a robot's going to come and do it. And I think it's a matter of not if, but when.
I like it. Before we was talking off air, we were talking about the term prop tech. And I guess, at least from my perspective, you could put robotics in that. With your new firm and just the companies that you're investing in and the broad range of companies that you can support and give capital to, would you say prop tech is a term that is outdated, is got bad connotations, like we need to create something that encapsulates all parts of the built world?
I think historically prop tech has meant selling software to real estate industry incumbents. And the way we think about sort of our investment mandate, at least, is that you are building a big variety of business models selling to all the participants in physical world industries. So prop tech, in a way, is a subset of that, but we think the opportunity set is just much larger.
Fair.
And we can talk about sort of the winners or losers from the businesses that were built in the last, call it 10 years, selling to real estate incumbents. I think you have publicly traded companies in Procore and ServiceTitan. You have some very interesting private businesses in like VTS and Meet the Leads and Equipment Share. But you also have a lot of experiments that didn't work out as well, like WeWork, right? And I think because of the scale of the industry, there were a lot of very bold bets that were made, and some of them panned out more than others. But it's less about what worked and what didn't work. In the past, for us, it's about how we view the opportunity set for the next 10, 15 years, because that's our investment mandate and horizon. And we think that, again, the opportunity set goes beyond just the incumbents, or sort of making them do a little bit better, but thinking about the full suite of business models and the full suite of physical world participants. And if you're not selling to them, are you replacing them? And if you're saying that the way that we do business today, sort of between supply and demand, is broken, let's bring new supply into this market and just build new stuff altogether.
Yeah. One of the points you made early was you gave some examples of construction tech startups that have gone on to do pretty well. Procore is probably, you mentioned them, it's a good example. And my head, and I might be wrong about this, and I'd love it for you to say, no, it's not quite that simple, but like construction tech firms that, when we think of the building life cycle, I think of architecture, engineering, design, construction. That's kind of one world. And then there's the operation of the physical buildings, which is another world. And you could say there's even more worlds, but like those are somewhat separate. And prop tech, I would say, encompasses both. But it seems like there's been more successful exits, or there's been more success on the part of the construction tech firms than on the building ops or facility or kind of in the use phase of the building type companies. But you gave some good examples of companies that have been successful there. And you also noted selling to the logo, right? Like we own a lot of buildings. Real estate's the largest asset class. We hear that a lot. So I guess as I'm listening to you speak, I'm thinking, maybe it isn't as simple as, construction tech's been more successful. Op tech, prop tech, however you want to describe it, hasn't been as successful.
I think there are a lot of good success examples, sort of on the consumer side in sort of the building life cycle. So if you think about Airbnb, if you think about Nest, if you think about Sunrun, I think a lot of those businesses have a consumer angle to them, and they've done quite well. I also think that sort of on the software side in particular, there are a lot of sort of incumbents in this industry that were born in the 90s and 2000s that continue to dominate. Autodesk is a monopoly, CoStar is a monopoly, sort of Yardi and its peers are predominantly private. So there are some like very solid businesses out there. Maybe we haven't had too many new ones because we haven't, like, the industries didn't need them as much, right?
Yeah. And some of those companies you mentioned are kind of known to be serial acquirers. So you could also argue one dynamic is, if this company becomes big enough, we are in a position where we can go buy them and we can spend enough money on them that they will probably say yes. And we've seen that happen a fair bit as well, which maybe also kind of limits how big those companies can get, because at some point they just say, hey, this is a bit of an easier path, and we've been working at your startup for 10 years. You might say, look, I'm kind of ready for a little bit of a break anyway.
Right. And I think the big question right now is, with the advent of vertical AI, is whether these incumbents will sort of internalize some of these new AI tools, or if you're going to be able to create some big, interesting new platforms altogether. And I think that's the big open question, right? And we're probably going to find out very soon.
Yeah, I think that's true.
We have a closing tradition on the podcast where we do a quick rapid fire round. I think we've got time for maybe 3 or 4 questions, completely at random. We've got 8 to 10 questions that we normally ask, but let's pick 3 or 4.
Yeah.
Joe, kick it off.
Yeah, I was going to say, Raja, if you could change one thing about the industry, and we usually ask specifically smart buildings industry, but it can be broader, right? If you could change one thing about the industry, what would it be? Something that is just frustrating or adds friction.
I wish more people in the industry were structurally allowed to take more risk.
It's a good one.
The buyer's risk appetite is structurally limited, and I wish the industry allowed for more risk.
Yeah, that's a good one. Here's one I think that you'll probably love, given the family. What is your favorite building?
What is my favorite building? There is a ancient Crusader castle, Crac de Chevalier, about an hour and a half west of where I grew up in Syria. And it was a outpost by the pharaohs from several thousand years ago, when they sort of expanded up north. And every sort of foreign occupying force that came to Syria came and built on top of it. And then when the Crusaders showed up like 800, 900 years ago, they built this massive edifice that still stands today. And I think it is the larger Crusader castle in the world. And it is beautiful. But it is about this sort of, above and beyond the architectural value of it, it tells a story of renewal, right? And permanence. And let me tell you, those building materials 1,000 years later are still quite intact. They withstood yet another war.
Yeah. And the location was probably strategically a good place to put a castle, a fort, so
on top of a hill, sort of between the axis of the Mediterranean and the axis of the sort of center of the country where the population center is. But I think it tells sort of an architectural story of many buildings, sort of one on top of the other, and all the cultures that pass through at the same time. And I think sort of buildings are supposed to tell that sort of human story, right? The older, the better.
I mean, that could be the best answer we've had for that question.
I think so. Yeah.
I was going to say the Zaha Hadid building on the High Line, but that was easy.
Yeah, it's too easy. Final two questions. What's the proudest achievements in starting the firm?
I'm proud of each and every one of the 12 founders that we invested in. Sort of, and I'm hoping that they continue to make us proud. I think of my job as taking a handful of investment decisions every year and writing the coattails of the folks who do the actual work. So all kudos goes to them.
Love it. Final one from my side. What's the trend that we are either seeing or likely to see in 2025, and how will it impact us?
This might be a contrarian view that I have, but I think more international trade. I think tariff policy is going to disrupt a lot of existing trade routes that are actually, especially for our industry, have had a lot of slack in them. I think folks have been buying from the same sources for decades, and they don't realize that there are far more efficient sources outside of the US that they could be looking at. And I think sort of this year and over the next couple of years, we will see a lot more international trade than people think, as supply chains are forced to reorient.
Yeah, there's kind of a restacking of how the supply chains work, but that doesn't mean they go away. Yeah, I like that one too. Yeah. Yeah, no, I think that's good. That's perfect. Yeah, this was great, Raja. It's really good to get your perspective on robotics, on construction. I mean, those are known areas of interest for our listeners, but maybe the familiarity you brought was excellent. So thank you.
Thank you guys for hosting me. This was fun.
Yeah, it was a lot of fun. Take care.